I'd now like to introduce you to Haynes of Currency Index, who will talk to you about the challenges of managing exchange rate risk and the intricacies of international payments. Haynes, over to you.
Thanks, Nigel. Hello, everybody. I'll just try to share my screen as well. Bear with me a second.
Right. And well, over to you.
Okay, does that all look all right? Good, yes. So just a 10-minute chat for everybody through exchange rate risks and how to manage your currency transfers when you're buying and moving to Portugal. It's something that's often overlooked until the last minute when you're buying property and making the move with all the various things that you've got to consider. But I think, as a couple of the previous speakers pointed out, it is a very important factor and can make a huge difference to your budget and what funds you have available. So it's something you don't want to get wrong, something that most people only do once. So it's important to consider it early on in the process and make sure that you're managing your inevitable exposure to the currency markets when making any move. So the subjects we'll cover very quickly are the general volatility in exchange rates and the difference that makes to your budget. A little bit about Brexit, particularly becoming a more and more topical issue as the end of the year creeps ever closer. A little bit about security of funds, which is obviously important when you're moving large sums of money around between countries. And then a brief introduction to the different processes and how moving money with a currency broker compared to using a bank differs. So for volatility, it's inevitable, as I say, that you're exposed to moving exchange rates when you move abroad. The market is constantly moving, and you may not realize if you haven't looked at exchange rates, but the movement in one day can be 1% quite easily, up or down in any particular currency pair. So that can make quite a big difference if you're moving a large sum. A 1% swing can easily be a four-figure sum up or down each day. So it's something that is frustrating that you have to deal with a very volatile and complex financial market. Things that cause these movements typically will be economic data, political news, and worldwide events. And obviously, in recent times, the unprecedented coronavirus crisis has also been affecting exchange rates, and that's not something anybody would have predicted a few short months ago. So just to give you an idea, over the last 12 months, we've seen the pound against the euro at its peak around 1.2, which was back in February, and at its lowest was last summer, just before Theresa May resigned, I believe, down at about 1.08, when it looked like the initial Brexit deal wasn't even going to happen. So just in the last 12 months, it has been an extremely volatile 12 months, even by any standards, really, with Brexit talks, a general election, a new prime minister, and the global pandemic. So we hope that we won't have quite so many seismic events next year, but I think it's not out of the realms of possibility. Just to give you an idea of the difference that makes to a typical property purchase of around 200,000 euros. Obviously, you can multiply these amounts if you were moving lock, stock and barrel and actually moving to Portugal. You may be taking larger sums than this. If you're just buying a property there to start with, it may be less, but just to give you a flavour, the general election in December obviously delivered a Conservative majority, which wasn't particularly expected to be as big as it was. And without making any political comment at all, one thing that you can be sure of is that financial markets do like certainty. So a hung parliament would have probably been very bad news for the pound. Any majority with a stable government that's able to make decisions gives certainty, and as a result, in December, around the time of the election, we saw the pound increase by about 2.5 cents against the euro, making that typical property £3,500 cheaper. Similarly, when the initial Brexit agreement went through in January, which was not quite down to the wire, but was never a guaranteed event, again, certainty. We knew we were going to be in a transition period for 12 months. That gave the market some confidence in the pound. The pound went up, and your typical property there became £5,000 cheaper. Unfortunately, on the flip side, March, when we entered lockdown, which was a very sudden event, particularly in the UK, it came up very quickly with very fast-moving events and shut down most of the economy in the UK. Obviously, markets didn't like that. The pound fell significantly over those weeks towards the end of March and early April, dropped actually 9.5 cents. So that typical €200,000 property was suddenly £14,000 more expensive. So that just gives you an idea of the sort of effect these events can have on your budget and your funds that you're going to end up with if you're moving, retiring, or just buying in Portugal. Coming up, unfortunately, we have another big event that is the Brexit trade talks, which are allegedly going on at the moment. There are not many positive noises coming out of either side for those talks at the moment. Obviously, for everybody moving abroad, we hope there's a resolution to this by the 31st of December, and we hope that you might have a trade deal in place. If that happens, I'd certainly expect to see the pound go shooting up. That might give you some excellent exchange rates towards the end of the year and into next year. Sorry, this is sounding a bit like a weather forecast, but it is about that certain and uncertain. The other side, of course, is if you're not confident that there's going to be a long-lasting full trade deal done with the EU before the end of the year, that is very likely to keep the pound under significant pressure. And that's what we've been seeing in recent weeks as well, with the pound sort of running along at quite low levels. And I think it's a big gamble to take if you expect a trade deal to be done and exchange rates to shoot up later on in the year. Obviously, that may happen. It's not beyond the realms of possibility, but most of our clients at the moment are urging on the side of caution and expecting that the pound will probably not do very well during the last quarter or 4 or 5 months of the year, simply because the trade talks are not going well. There don't seem to be good noises coming out of either side. And if we are going to end the transition period on the 31st of December without a trade deal in place, then really we don't know what the economic impact of that is going to be in 2021. So we'd expect the pound to, I'm afraid, continue to be under significant pressure. So the other points with Brexit to consider are, if we're out of the EU, is it going to be harder to move money around? Is it going to be harder to send money to Portugal? Is it going to be more expensive to make bank transfers between countries? The answer to that, we are fairly sure, is no. It will be the same as it is now. The UK is already signed up to remain in the SEPA zone, which is the Single European Payments Area, which means that moving money between the UK and EU countries shouldn't have any additional barriers placed on it. So it should be just as quick and simple to move money between the UK and Portugal as it is now. Obviously, the exchange rate may not be great, but the actual logistics and physical requirements needed to move money shouldn't be any more difficult than they are now. Just quickly to cover security as well, in terms of moving funds when you're buying abroad. You may have large sums of money flying around between different countries, companies and banks, and it's always advisable to do your homework. As a currency broker, Currency Index is regulated by the FCA in the UK and is UK based, and it's recommended that you do your homework with any currency broker you're speaking to. Make sure they are properly regulated. I'd recommend only using a UK-based company if you're based in the UK, simply because you know the procedures in the UK, you know that you can complain to the financial ombudsman. You know how business is done in the UK. And there are companies that operate and are regulated in other jurisdictions that may not have equivalent safety and security in place. There are several other things to be careful of when moving money abroad, whether you use a broker or your bank, to watch out for. Increasingly, particularly during lockdown, fraudsters have been intercepting and hacking emails exchanged between property buyers and their agents and lawyers. So I'd always recommend, if you receive payment details from your lawyer or from your property agent or anybody by email, do always ring on a verified number that you know and check the details are legitimate before you instruct any payment through your bank or currency broker. We've had examples where lawyers' email accounts have been hacked and fraudulent payment details have been passed on to clients who have then passed them on to us. Thankfully, with the security processes we have in place, we've spotted and stopped those payments, but it is an increasing fraud to be aware of. When you're sending and receiving payment details by email, always verify them verbally by phone, and that's the same whether you receive an invoice or an email just copied and pasted into your inbox. Do make 100% sure that before you press a button to send money, that all the details are correct. Other than that, using a currency broker is very safe and secure. It's a regulated industry in the UK, so as a payment service provider, we have to have quite a lot of capital in the business. We have to have robust systems, processes and procedures to check and verify everything that we do in terms of looking after client money. And in addition, you do have recourse to the financial ombudsman in the UK if you're not happy with any regulated currency company's behaviour. Processes and procedures when you're using a currency broker are fairly straightforward. It's not a frightening process to go through. You should have a good high level of service from a reputable currency broker, and ideally one point of contact to look after you from start to finish. There'll be all sorts of new terminology. If you're moving money abroad for the first time, then you'll have things like an IBAN, which is an international bank account number, SWIFT codes, which are like an international sort code. You'll have to do your research on receiving and remitting charges between banks, and know the limitations around using things like bankers drafts internationally, which can cause delays and extra charges. So there's a whole new kind of vocabulary that you'll come across when moving money internationally. And if you're talking to a friendly, experienced currency broker, they'll have very good knowledge of all these things and make sure that you have all the information you need to ensure that you don't fall foul of any unnecessary charges or delays. So it's always a good idea to speak to a currency broker early on in the stages of looking to buy abroad, perhaps 3 or 6 months even before you're looking to go on viewing trips and look at areas to buy, because you can start to get yourself familiar with exchange rates and familiar with all the different processes and things that are needed, rather than leaving this to the last minute, which can cause stress. Obviously, you can still use your bank to move money abroad. That's still what about 50% of people do. There are pluses and minuses to using a bank compared to a broker, and again, you can do your research and make your decision. Banks are obviously high street names. They've been around a long time, but you will tend to find that banks' exchange rates are 3 or 4% below what a typical currency broker can offer you. Banks do tend to use their reputation and the fact that people just walk into a branch and ask them to send money abroad to slip in very poor exchange rates occasionally. So I would always check an exchange rate you're getting from your bank against that a currency broker can give you. Even if you have decided to use a bank, you can still make sure that you're not getting a terrible deal. Obviously, currency brokers are here to provide a better value, and exchange rates can be significantly better. So Obviously, I have a vested interest in saying it's better to use a currency broker, but do your homework, check rates, make a comparison, and make sure you understand what you're paying with each type of provider. Exchange rates will have a margin built into them, whoever you use. So if you ring your bank and say, what's the exchange rate to send some euros to Portugal, the rate they give you will have a margin built into it. That's the same if you use a currency broker. So you can very easily compare rates. The cost, therefore, is somewhat included in the rate. So you can't compare a commission rate or a margin that the bank or the broker are making, but you can directly compare exchange rates from one to the other. Banks also tend to be a bit slower. If you go and fill a form in a branch to send money off to Portugal, that form's got to be processed by the branch. It's got to be sent off to head office. Someone's got to process it there. Someone else has to approve it. There's a long process involved. So you tend to find money sent through a bank will take anything up to 3 or 4 days to arrive in the destination account in Portugal. If you use a currency broker, that's all we do. We just send money out for people. So it's very, very quick, and we can usually get money there the same day that you send money to us. So as long as your broker is regulated and you're comfortable using them and they're offering you a good deal, usually you'll probably err on the side of using a currency broker as well. The other thing we can do is offer other options such as a forward contract. That's where you lock into an exchange rate in advance. It's a very useful mechanism when you're buying a property abroad. You've got a payment to make in the future, which could be a significant payment in euros. You don't perhaps have all your sterling yet because you're selling a property in the UK or cashing in some investments or waiting for a pension drawdown. You don't have to wait until you have those funds to lock into an exchange rate. You can use a forward contract to fix a rate up to 2 years ahead. Advantages of doing that are that you know what you're getting, you know what the euros are costing you before you pay for them. If the exchange rate drops in the interim, you'll be very pleased that you fixed your rate. Obviously, if the exchange rate goes up in the interim, you'll wish you hadn't done it. But the main reason most people will use a forward contract is for peace of mind. So you know that you're not going to suddenly find one of these big swings against you between the time of buying a property and paying for your completion. So you know what your property is costing you in pounds and pence. And I think most people say to us, I wouldn't buy a property in the UK if I didn't know how much it was going to cost me. So why would I do that when I'm buying in Portugal? Some people like to take the risk and see if the exchange rate will improve, but most of the time you're trying to protect your budget, you're trying to manage your exposure to those exchange rate fluctuations. So I would always encourage people to consider locking in a rate, particularly if you've got a large amount to move. Or you can hedge your bets, of course, as well, and fix a rate for half of the amount that you know you're going to send and leave the other half rather in the lap of the currency markets. But try not to become a currency speculator. You're moving abroad for the lifestyle, you're moving abroad because it's a move you want to make, and it's very easy to get sucked into trying to second guess the currency markets, which if you're lucky will work out for you, but if you're unlucky can be an expensive surprise when it comes to buying your euros at the end. A little bit about Currency Index. We are a award-winning currency broker. We have lots of nice badges for being nice and looking after people over the years. We try to offer a really good personal service with an account manager to look after you from start to finish. And again, I think that's something that's quite nice when you're dealing with lots of different people. When you're buying abroad, you're dealing with all your finances in the UK, you're dealing with all the new things you're doing in Portugal. I think having one point of contact on hand here that will be an experienced person, knows everything there is to know about currency transfers and takes time to get to know you and look after you is certainly something our clients tell us is valuable. Exchange rates speak for themselves. You can compare our rates, and you should find that we're making you a decent saving if you get quotes from us when the time comes. And of course, that important FCA and HMRC regulation in the UK. So that's just really a very brief overview of looking after your currency exposure when you're moving to Portugal. I appreciate lots of people will want to be getting out this year before we leave the EU. That gives you a little bit of a problem with what's going to happen with exchange rates potentially towards the end of the year. So I'd encourage you to be speaking to currency brokers early on in the process and keeping really up to date with what's happening. Rates can move very, very quickly. So if you're looking to go out and buy later this year, speak to a currency broker early and make sure you're up to date with all the latest information. You don't want to go out viewing with the rates at one level, put the deposit down to take a property off the market and come back and find that the rates dropped because Brexit talks have broken down. So do keep on top of developments. On the other hand, if you're looking at buying next year, potentially at the golden visa options or whatever else the government's come up with, again, probably towards the end of this year, start to speak to a currency company and make sure you're on top of things. There may be opportunities in January. If the rate may suddenly increase, if it looks like a deal is in the offing. But of course, at the end of the year, we may see lots and lots of volatility, I'm afraid. It's very, very hard to predict. So more important than ever to be in touch with some friendly currency brokers. So I'd be happy to take any questions. You can find our details at Currency Index by searching online, and be very happy to help anyone who's watching just chat through what's happening and chat through their requirements.
Many thanks, and Robin.